Good evening and welcome to this session of the live coaching classes conducted by the Board of Studies of the Institute of Chartered Accountants of India. Before I greet those of you here who have come and wished me, let me start with a prayer, rather a chanting of a very, very powerful invocation that will ensure that our studies are not disturbed and that we are able to study calmly so that it can help us to become members of the institute. Sahana vavatu, sahanau bhunaktu, saha viryam karvavahai, tejasvina vaditamastu, ma vitvishavagai. Om Shanti, Shanti, Shanti. So nice to have so many of you. Okay, a small personal touch that I want to thank our great Mr. Dhyanesh. I don't know how he managed using translator. He is able to put in Tamil. I don't know if he can understand what he has put. He has put good evening in Tamil. Thank you very much. And the rest of you, Alok, Dhyanesh, Jyoti Jaji, and Abhishek Pandey is here. Abdul, as usual, has a question. We'll answer that. Priyanka, Mohammad Aslam gives me a very, very powerful thing. Thank you very much, Mohammad, for your kind words. And Harshit Jaiswal, Sushil Kumar Barik, Piyush Chaursi, I'm sure others will keep joining us. Pat Sardi and all will keep joining us as they come. In the meantime, let's begin with the question from Mr. Abdul, which is special notice can be sent by the members of unlisted company not having anybody. That is why you will find, let's go to that particular provision quickly so that you can understand it. We were, in the last class, we completed all this and we came to removal. Okay, removal of auditor. We finished casual vacancy. We came to removal. And when we came to removal, before the expiry of term of office, we saw special notice. There, they have given very clearly that members holding not less than 1% of the total voting power. In the case of a company not having share capital, total voting power will be number of members. So based on that, you can find out who is holding 1% and they can come. So it can be given by members, shares company, unlisted company. Of course, unlisted company, definitely. This is applicable to all companies, whether listed or unlisted. This is applicable. Guarantee company also, not having share capital also, special notice can be given. That will be based on the number of members. Okay. So members holding not less than 1% of the total voting power. Your question is based on the fact that it says total voting power. Where there is a share capital, then one share, one vote. Where there is no share capital, then one man, one vote. That is the rule. Based on that, we have to work. It's a rare situation. As usual, you are asking a question of a situation which is rare, but theoretically possible. So the answer is yes. Okay, Dhyanesh is asking one very powerful question. Is this your last session for this batch? Inshallah, no, because March end, I have 2 sessions on Negotiable Instruments Act. With that, no more. Okay, NA Act, inshallah. Again, I say inshallah because nothing is in our hands, but March end, I'm having 2 classes on negotiations. Other than that, nothing. In between, I won't be coming. This entire March, I'm very busy, so I couldn't accept classes. And so sorry. And Prachiji, this is evening, not morning. Good evening. Samirji, welcome. And wonderful. Now moving on. Yesterday we saw the other class we saw up to this, and then we went to removal of auditor in the case of fraud. I think that also we covered. Okay, we covered it, and so now we are going to a powerful topic called resignation of auditor. Once upon a time, in the old law, resignation of auditor was something that the board could not appoint him. If you remember, resignation of auditor is a casual vacancy. Where the auditor resigns, it creates a casual vacancy. The casual vacancy cannot be filled by the board where it is resignation. Other than resignation, board can fill. But resignation alone, board cannot fill. it can be filled only by the members in general meeting. Also, resignation of an auditor is a very, very powerful thing, where when an auditor is resigning, the Ministry of Corporate Affairs would like to know why. Why are you resigning? Okay. So whenever there's a resignation, the auditor has to file Form ADT 3, okay, wherein he has to give the reasons for his resignation. In the case of a government company, he should file it with the Controller and Auditor General, the company, and the registrar. Similarly, in the case of government company, the resignation should be filed with the company and the registrar. See, earlier, when an auditor resigned, the registrar did not get involved. It was the company. Then the board could not appoint. You appointed an auditor at a general meeting. That's all. That was the only control. Now, the registrar is also given. So the resigning auditor, see, for example, if you arm twist the auditor and tell him to resign, instead of removing him, instead of removing him before the expiry of his term of office, without going through this process, you arm twist that guy. You sort of put all sorts of pressure on him and say, please go. Then finally he says, okay, I will resign. Now, in that case, here the government wants to know such cases. Quietly, if you make him resign and run away, they want to know, oh, so this auditor has resigned. Why? So, of course, in all fairness, whenever an auditor resigns, invariably, we also are very careful. When we have a dispute with the company and we don't want to sign and we want to resign, we will simply say, due to our other professional commitments, we are not able to take up the audit, complete the audit. Kindly appoint somebody. I mean, you can take our resignation, and they will appoint somebody else who's more amenable to them, and they may go ahead with the work. That's it. So, I pray this is not a big control. But if an auditor wants to qualify and he is being arm twisted and forced, then here is one more powerful weapon where he can inform the public through the registrar about the reason for his registration. Now, the auditor has to file this form ADT 3. If he does not comply with the provisions relating to registration, then he or she, it or shall be liable for penalty of 50,000 or an amount equal to the remuneration of the auditor, whichever is less. And in case of continuing failure, with fine of penalty of 500 rupees for each day, for such during which the failure continues, subject to a maximum of 2 lakhs. Earlier it was 5 lakhs, now it is changed to 2 lakhs. For not filing ADT 3, I have to pay. See, so now I make it a point to file the ADT 3. Why should I be guilty? Because I am resigning for my reasons. I will give it and go. The problem is many times the company will keep on pushing. Then finally the date will be over. By then they will say, you go and sir, you resign from pre-dated. I cannot resign pre-dated or not. Want it now, I'll give it to you now. No, sir, no, sir. Sometimes it happens, rarely. See, when would an auditor resign? Think about it. When would an auditor resign? When he is not comfortable with the client's process or his compliances. Now, best thing is, before taking a client, do a due diligence. Before undertaking the work, ensure that the client would suit the firm's ethical profile. If the client would not suit that profile, better quietly, avoid the client rather than take the client and then get into trouble and then resign. Section 142 provides for remuneration. Okay, there is no ceiling. So there is no ceiling on the fees. The fee to be paid to the auditor is to be based on the work involved, the time to be spent by the auditor, the nature of the work, possible complication, etc., etc. So generally based on negotiation, see, who will usually conduct the negotiation is the audit committee or the board. Okay. And then they will recommend it to the members. Then the members, the company in general meeting will fix the remuneration, which would be there. Okay. In the case of first auditor, since the board is appointing, the board will fix the remuneration. Okay. Now the word remuneration shall include facilities and expenses incurred for audit. So all the expenses, for example, boarding, lodging, etc., would also come under the definition of remuneration. But remuneration shall exclude fees earned for any services offered at request of the company. As I already mentioned, auditor can perform tax advisory services, but auditor cannot perform consulting. 144. Okay. So that is why I'm doing 144 before I come to 142. Please understand why I am not covering section number order. Now you know that there are certain services which auditor cannot render. So remuneration shall exclude the fees earned for any services offered at request of company. So if suppose they want the tax advisory services, the auditor can render the tax advisory services. But if so, that will not be covered by under the audit provision. That is fees. It will not be part of the fee. Okay. Priyanka ji, abhi to I cannot give this. Maybe later, if time permits, I will definitely talk about this. But as of now, I don't think I'm taking general classes. Only negotiable. I think I surrendered those 2 sessions because I'm not in town on that day. Not in town. I'm traveling heavily. So I surrendered those. I'm not taking. Yeah, you unmodified opinion. Clear. What we call clean report. Clean report. Yes. Mitesh Bhai Patel, good evening. The amount of audit remuneration mentioned in the minutes of the meeting. Yeah, actually, it is supposed to be mentioned, but sometimes what they will do is auditor to be appointed and they will give the power to fix the remuneration to the board itself at such fees as may be decided by the board. But ideally, there should be an engagement letter wherein clearly the fee should be mentioned. Okay, it won't be. I have never seen it being mentioned in the notice and all. Okay, but this is a very, very transparent thing. For your information, the fees information would be disclosed in the balance sheet. In the notes on account, clearly you have to mention what is the fee payable to the auditor towards audit and other than audit services. What will be other services? How much have we paid to, including all his expenses, etc., etc. It should be clearly disclosed in the director's report. I'm sorry, the notes on accounts as part of the notes. The balance sheet notes, you have to give audit fees breakup also. So, if you want to know what is the audit fee, you can always, for a company, you can always look at the balance sheet and you will know what is the notes on accounts, you'll find the audit fees clearly mentioned. Meaning, sir, that the activities that should not be rendered by the auditor, if the auditor render those services on demand by company, then no fee will be paid and all. I'm not telling, hello, ji, no, who will pay? They will pay fee. Auditor will be, see, 144 violation for the auditor. If he is a contractual obligation, if he renders the service to the satisfaction of the client will pay the fee and he can receive the fee. But the 144 violation, he'll be violating 144 disqualification. See, he will no longer be capable. If you render a service to which 144 applies, there is a violation there, penalty, etc., Plus, you will also be disqualified. You cannot be the statutory auditor. This is the consequence of 144, not remuneration. Remuneration can be paid. There is no prohibition. If you got that idea, please change your mind. There is no prohibition on payment of remuneration for 144 activity. No. But if you do 144 activity, then you are disqualified to be the statutory auditor. So you decide which fee is more important for you. And if you feel that the other service is more valuable to you fees-wise, then better you resign as an auditor and become consultant. Are you able to understand? Or do some planning in such a way that I gave you an example where I showed indirectly. There you go do some interpretation and render the service. That's all. Through some other entity, not through the audit firm. You cannot do that through the audit firm. I hope you are clear, Mr. Vora. Who will decide the remuneration of new appointed by board in casual vacancy? Board. That's all. The board is appointing, board will decide. That's all. Okay. See, you are asking me a question. I am also answering. Obviously. I don't know actually, but logically board only now. Because casual vacancy, you are giving the power to the board. There is nothing explicitly given in the act, boss. In my case, I am willing to apply my common sense and give answers. That's all. Okay, because I can't, to whom will I go? In fact, many times students raise question like this. For me, according to me, the authority on company law is company secretary. So I go to some of these company secretaries and I ask them the same question. They also don't know. They also don't know. So they don't know, they remain ignorant. I also, there is nothing here. I use my common sense and I say, hey, somebody tell me one thing. Suppose the law does not give clarity as to who will fix, but board is also not doing, shareholder also not doing, the auditor will not take up the work. Yeah, unless you pay the fee, who will come as auditor? So if you want to be safe, board can fix. No, sir. Where is it, sir? Where is it there in the act, sir? Like that, if you ask me, then what I will say? Chalo, you are afraid of it? Then hold a general meeting, appoint him in the general meeting, fix the remuneration. See, board, they have given board the power to appoint in casual vacancy. But still, if you are afraid of it, go and appoint him in general meeting. There is a better option. Nobody is preventing you from appointing him in general meeting. But as of now, to answer your question, it is board which can do it. Yeah, madam, you can also try to see if your speaker, you have a problem at your side. Friends, are you able to hear me? Because I have a complaint or I have a suggestion to increase speaker volume. I don't know how to increase my speaker volume. I'm using a mic. I don't know how I can increase my speaker volume. Anyway, so kindly check up if my voice is okay. Am I audible or is there audibility problem? So, yeah, as you rightly say, it will be another expenses part. Very good. So the services mentioned in fourth point are the one for no sir. Other than 144. Vedant ji, Ora, you are really getting it. Boss, there are certain services which can be rendered. Those services, if you pay the fees, that fees shall be excluded from remuneration. Got it? Fourth point is not 144. If you cannot render 144 at all. That is all I'm trying. If you render, you will be disqualified. What more can I, how else can I communicate this to you? So don't even go there. Fourth point is those services which can be rendered other than 144, for which you are paid fees. That fees will not be included in remuneration. Clear? Madam, audio and video is good. Others are confirming. Kindly do not put this type of comment in the query pad. If you have an audibility problem, complain to the help desk, who may inform me officially. Only then I will take cognizance. Any student putting in the query pad, generally I will not take cognizance. It may be a localized problem. Okay. So kindly don't waste your time putting all that. Whatever you can, or come nearer to the system and listen. That's all. Sometimes I do that. When in Zoom meeting, some people will not. Some people don't even want to raise their voice. Yeah. Like that they will talk. In those cases, I will come nearer and I will listen. Okay. Now moving on. The statutory auditor can take up income tax cases of the... Why not? There is no prohibition. Income tax representation, tax advisory services, GST advisory services, all that you can do. GST representation, everything you can do. No prohibition. Okay, thank you. Audible. Oh, so many of you are. Thank you. Good. Now moving on. See, these are powers of auditors. See, auditor has a huge responsibility and duty. Now, commensurate with that responsibility and duty, the auditor should also be given certain powers. So, every auditor of a company shall have a right of access at all times. Friends, note the point, at all times. Okay. Of course, you can take, immediately don't jump and ask me, can I go at midnight and ask him? At all times means at all reasonable times. In other words, the real point which you should understand, instead of asking controversial questions like, sir, at all times means can I go in the midnight? No, during working hours. But the point is, suppose you go during the working hours, at any time you can go. They cannot say, no, you can come only when we tell you to come. See, there might be a courtesy of the auditor asking them, can I come? Are you ready? And there can be a responsibility. But if these people are not, I can always enter. I can go there. Whatever books are there, you give me access. In fact, today with online, ERP and cloud-based accounting and all that, the word at all times has taken on a new meaning. For example, most of our larger audit companies, now audited companies, are online. They have ERP, cloud-based ERP. Their data is 24/7 available to all of us. So our audit team will only take a view access and we'll have user ID password. With that, we can access their account. So sometimes, in nearing the finalization time, we will work late in the night and we won't even have to go to their place. Sitting in our office, we will work. Till 11:30 in the night, we will work because season time that happens. I'm sure many of you would have had similar experience. Maybe you might not have had, because some of you are all still writing your intermediate. So once you go for articleship, you will understand that sometimes you have to work late into the night in season. That's about 4 months during the season from June, July till November. It will be peak. For us, it's peak. I don't know about others, but for us, it is peak. And so people will work sometimes late in the night weekend. So at all times, we will have access. It's only when physical books of account are maintained that you have to go to the registered office of the company, etc., etc. Okay. So as you know, books of account should be maintained at the registered office, or it can be maintained at any other place based on the provisions. You have to inform the registrar and things like that. Okay. So auditor is entitled to access. See, because if you deny access, then the whole point of audit is lost. I should be able to see anytime. But having said that, the courtesy and the usual correct audit methodology is we have an audit plan and we send a mail to the auditee asking them well in advance, say even as early as in the middle of the year itself, around August itself, July, August or September, we will go for an interim audit, or December, nearing December, we'll go for an interim audit. Depends on the auditee. So that a substantial portion of the accounts will be verified. Then again, nearing the year end, we will keep going. And so that around June, we should be able to finalize the audit and release our opinion, or at least come out with our top queries to the board, so that there can be a final discussion with the board as to what are the qualifications, if any, or what they are supposed to do to get a clean report from me. If they are willing for the disclosures I am suggesting and the accounting changes that I am suggesting, accounting entries, then they are at liberty to, I will get a clean report like that. For example, one client had a major issue about representation of bad and doubtful debts. So I had one view, they had another view, and I said, this is the view that will be transparent. The other view will be netting off is not a good idea. I said, I'm not going to allow you to do that. If you want me to do it, you do it this way. Otherwise, you do it, I will qualify. It's up to you. So that takes sometimes the board of directors will need convincing. The problem here is this may not be at the board level. It could be at one director level or at one high up VP level, who may be having a chip on his shoulder and saying, this is how this is. Finally, meeting after meeting after meeting, finally, they will come to senses and they'll say, do what the auditor says or do what they say, or else we will take a qualification. Like they have to take a call. Whatever it is, we should have access at all times to the books of account, vouchers of the company. Okay. Now, see again, friends, there is an ocean of change between what was in the past and what it is now. Our generation means people like me who are born in 60s and did our CA in the late 80s, rather 80s and 90s. That's all. Maximum 95. So the cusp is something like 80 to 95. 1980 started articles, or 75 to 95, 20 years. Those of us who, that will be some seniors of mine also would be in that category. But they would be now very senior. They would be now slowly moving out. Okay. We are the few people, we are those group of people who have seen manual accounts. We have audited and certified manual accounts. Books written, kagas mein, paper. And we have seen the transition from that to, shall we say, computer-based accounting, which is still used to printed documents for finalization purposes. We used to print out the ledger, print out the, to now, where nothing is printed, everything, ledger is online, everything is online. Only for the purpose of tax authorities and MCA, we print out the balance sheet and sign. Otherwise, everything is online. I don't have to take any printout, anything. Vouchers, except for original vouchers, where I'm having doubt about that expense and I am asking for proof, forensic level. Otherwise, most of the expenses are reasonable. We go on. We don't have to every voucher, 50 rupees tea voucher and all. And there's no need to go and audit. So if somebody is going, we'll do a random verification. Depending on selection, random selection, yes, we will take up vouchers and do it. Other than that, I don't think today that is the culture. There are better and more diagnostic tools available. Technically, we can do it online. So why I'm telling this to you, though the section remains the same, the methodology of audit has undergone a sea change. Today, we are into IS audit. In fact, IS audit is a very powerful discipline. Information systems audit, risk assessment, etc. is a very, very powerful discipline. In fact, okay, so I am a certified information systems auditor, CISA, certified information systems auditor. I'm a member of the Information Systems Audit and Control Association, USA. It's a US body where I have cleared the CISA examination, which means that I am competent to audit, or I'm competent to look at information system security and certify and also audit. Just for your information, this is something that, of course, our institute has also got DISA, which is an equivalent or better qualification, which is offered by our own institute on information systems audit. Post qualification. Once you become a CA, you can become DISA also. So that is great. And so Abhishek Pandey says we have a server which is running 24/7 and we have a login ID and password. So anytime, exactly. And I'll give you an answer later. Pursuing articleship in, I don't know which city you are in. Therefore, if you are in a district level, district headquarters, or in a smaller town, then it definitely makes sense for you to move to your state capital. To your state capital. If you are in a district headquarters, and unless there are some good firms in your city, just check out in your town. If it's not a metro city, just check out in your town if you have good auditors. But definitely your exposure would be better if you go to the state capital. Whichever state you are in, go to the state capital. Where the chances of your getting better exposure is high. Okay. Or else, of course, you have the ultimate head of all places, Delhi and Bombay. Going to Delhi and Bombay would be the best thing. But even state headquarters are better than district headquarters. If you are in a district headquarters or less than that, then better you go to nearest metro or go to, for example, in Tamil Nadu, we have 4 major cities, Trichy, Coimbatore, Madurai, and Chennai, the headquarters where I have my office. Madurai also we have a branch. So Madurai is also good. Madurai is an excellent growing town. So somebody who's in Tirunelveli or say Thoothukudi or Nagarkoil would like to come to Madurai also. Madurai is an excellent place. So there is nothing called capital city only. But yes, between this, then the capital city will give you a little more exposure. Then, though in my humble view, Coimbatore and Madurai, Trichy are also equally having complex audits and good firms where you can learn. So you have to check out where it is good and you have to work. This is the best suggestion. So I can talk about the state where I am having some experience. I may not be able to tell about Bihar or Jharkhand or Madhya Pradesh or Chhattisgarh. I may not be able to tell exactly which is good or bad. So you will have to check out and then talk. Okay. Entitled to have necessary information. For example, in Karnataka, Mangaluru is a beautiful town. Heavy, extraordinarily brilliant auditors are there. And so you don't have to really move to Bangalore. You can as well do your articles in Mangaluru, which is excellent, according to me. There are excellent firms there, very dedicated and highly brilliant chartered accountants are there who can give you far more better exposure. Even if you don't go to Bangalore, you can do this. So this is my view. Okay. So, right. This is access to books of account and vouchers. B is entitled to have necessary information and explanation. Okay. So when the books of account are presented to me, they are merely transactions. A narration would be there. Some links would be there. I will be able to, by and large, understand what it is all about. For example, a purchase bill, I don't need much explanation because once I see a purchase bill, all I'm looking for is whether the GRN is there, whether the purchase order was there, whether the terms of the purchase order have been correctly complied with in the PO, in the purchase bill, blah, blah, blah. I'll do that. But suppose there is one CapEx bill, wherein I don't know what it is all about, how it is connected to your business. Tell me. Then I may need information. So I may ask for further information about that item. How was the tender floated? Who gave how did you place the order? How did you select the bid? Which bid was selected? Why did you select it? These are questions I will have to ask. And this may not be available as part of the ongoing accounting record. Maximum I will have purchase bill that will be produced and PO will be produced. Goods received note will be there, or maybe installation, proof of installation I can ask. Proof of commissioning I can ask. But beyond that, I want to know some more information. What is this about? Why did you go about doing it? When you put it to use, in what way did you put it to use, etc., etc. So that is explanation. But remember one thing, you as an auditor or we as auditors can only find out if that money has been spent in accordance with the policy framework of the company. So long as the company has a policy framework and it is within that policy framework and it is actually spent, you have to stop there. You can't go beyond that. You cannot go into the propriety. You cannot say this expense itself should not have been incurred. We don't have the right to say that. There is no way we can report it. Propriety. Okay. Whereas in a government audit, no, when there's a government auditor, CAG has the power to question the propriety itself. Whether you should have gone for this at all, like that. We can't. For example, if they decided to expand and go for a new plant, honestly, you might be thinking their existing capacity is enough. They need not have gone. It is a white elephant. You might think, but in an audit, I cannot question that. I have to only ask, how was the factory constructed based on proper bids, where all the capex suppliers approved correctly? Was L1 selected? Thereafter, PO was it issued? Thereafter, supply was it made as per the PO? Payments have they been made as per the PO? Whether installation, supply, erection and commissioning is clearly documented. This I have to see. Finally, commissioning, put to use. I have to see them. That's all. Beyond that, I cannot go deeper than that and ask whether it should have been put up. I have no business to ask. Okay, there I stop. Okay, this is something you might want to ponder about. We cannot question propriety. You cannot question the management's decision. All you have to see is once the management has taken the decision, whether the expense has been incurred in accordance with the policy and it has been properly, control systems are there to ensure that there is no fraud and there is no leakage or seepage of revenue or income. That's all. Okay. So he shall be entitled to require from the officers of the company such information and explanations as the auditor may consider necessary for the performance. This is exactly what documentation is all about. I am possibly exceeding my limit here, where I am now, going into areas where you may not. In auditing, you should learn it, but I'm telling you, okay, you are entitled to ask for information. This is your documentation. If suppose tomorrow a crucial question should have been asked and it is not asked, it is not only enough if you ask, you should document it that you asked and that what reply they gave and how that was processed in your final opinion. How did you take it to account in your final opinion? And I know this is totally into auditing, but then there's an overlap here. That's why I'm humbly suggesting that you should know this. Okay, suddenly we have gone into an unnecessarily, Vedantwara has opened the can of worms. Now every city you're going to show me India map and ask me, boss, Mumbai is better. Straight away, Vedantwara, go to Mumbai. Go. Mumbai is far better than Delhi. But get used to Mumbai. Delhi is a different city. Mumbai is a different city. In Delhi, you will not have rubbed shoulders with your neighbor for a long time. You have so much space in Delhi, Saket, RK Puram, wherever you are, Chandni Chowk also, it's not as crowded as Mumbai, Sayan, okay, or Chembur, okay, or Worli. Worli Seaface is posh. There also people will be rushing. Get used to Bombay. If you're planning to go to Mumbai, mindset change. Be prepared for an ocean of a mindset change in Mumbai. My favorite city, Kolkata. Yes, good. Some of the top firms. For example, some of the old British firms had their head office in Kolkata, including Birla Group has its head office in Kolkata. Go for a big firm in Kolkata. Okay, is the point. Yeah, professional skepticism is what thing. So don't keep on asking questions and about cities. Pondicherry is not a big city in Tamil Nadu. Why? Because Pondicherry is not in Tamil Nadu. And Pondicherry is not a city. Okay, Pondicherry is a union territory. Okay? That, of course, the capital of Pondicherry is Pondicherry town, which is a good city. We have clients there and it's a good city, but not... In those days, it was an industrial hub where many industries went there for backward area benefit, but now it's not that thing. It's a good city. Like, it's a nice city for holiday, but possibly you might want to relook at that. It's fine. Anyway, nothing. We have a lot of clients in Pondicherry. I go to Pondicherry almost once in 2 months. I go to Pondicherry for a whole day and I visit my clients and I go and come back. But it's a good city. I'm not saying no. Good. Wow. I have opened a real can of worms. Abdul and Aslam are just throwing essay at me. Essay 500, essay 230. Exactly. Essay 230. I'm only linking essay 230 to this. See, you are asking for informational explanation. Now, document it. So tomorrow, if anybody is coming and asking you, how did you certify? You should be able to say, look here, I asked him and he has given this reply. And I have verified. And I found that what he's saying is correct. Document has been seen and I have closed it. Now you come and tell me that these are all forged documents. I have not seen forgery. I'm not here to find out forgery. If you think it's forgery, that's a forensic audit. But this is a very, very delicate subject because auditor has a duty to report fraud. Okay, we have to be little bit. You have to be careful there. Okay, access to record of all its subsidiaries. The auditor of a company, which is a holding company, shall also have the right of access to the record of all its subsidiaries and associate companies, insofar as it relates to the consolidation of its financial statements with that of its subsidiaries and associate companies. You can interpret this point insofar as it relates to the consolidation. Means the holding company auditor cannot conduct a fresh audit of the subsidiary. In your consolidation, if you are having some doubt about an item, you are entitled to open the subsidiary's books and try to find out what is actual for. Only for the purpose of consolidation, not for the purpose of, you can't conduct another audit of the financial statements of the subsidiary again. You cannot reopen the audit and say, I am going to redo the audit. They're already certified. But generally, which is why it is better to have the same man as the auditor in both cases. One. Two, if they are two different people, they should coordinate with each other and conduct. Ideally, they should synchronize the audits. See, if the subsidiary's audit is getting over earlier than the holding, it's a little bit of a problem. So subsidiary should be held pending till the holding is complete. That's the point. But if there are some compulsory mismatches, due to deadlines and all, it will be a different. Now we are moving into the inquiry, audit inquiry. Okay, so the auditor shall inquire into the following matters. Before that, let's question. Sarvoni Das, welcome, madam. Dalhousie area. You are reminding me of PBD Bagh, Dalhousie. Wow, that's okay. Fond memories of Kolkata. Can auditor access records of holding company if intercompany transactions are there? Auditor access records of holding company? No. Which auditor? Auditor of subsidiary, can he access records of holding company? Sir, first of all, holding fellow cannot access subsidiary. Subsidiary cannot access holding. Please understand. Only for the purpose of consolidation, holding auditor has an opportunity to look at subsidiary. Subsidiary cannot go and look at holding company at any cost. He has no right of access, even if there are intercompany. See, boss, if you got an intercompany transaction, you mean to say if there is an intercompany transaction, you will go and audit that company, is it? Even as you forget subsidiary holding, any company. Sir, there is an intercompany holding. What I should do, I can ask for the financial statements that they will give, or better still ask for a confirmation. That's all. Or my auditee, I have to say, look here, you are saying that you have borrowed or lent to that company now. Get me confirmation, show me bank statement, board resolution. That's all. Your duty is over now. If they have complied with the law and they have given, what is your problem? Or if they have purchased goods, see that it's at arm's length. From your end, you can do that now. Why do you have to go there? You can see it here itself. You don't have to go there at all. If you feel so, then ask for further information from the holding company. Write to them. They will reply. No problem. Send a mail. Okay, with the permission of your auditee, send a mail and get a document and keep it. Nothing more. Yeah. You don't have to go to those books of account and all. Then every auditor will be doing audit of every company. You imagine the nightmare. Auditing one company itself is such a pain. Why go and audit 100 companies just because there are intercompany transactions? No way. Of course, we do a normal account. We do an account confirmation. And we take the ledger, their ledger copy and get a signature. This is what is reflected. We ensure that the same amount is reflected there, reverse. So that we there should be a reconciliation now. And there should be a commercial justification. There should be a compliance with the law by the auditee. That's all. After that, what is my problem? Okay. Especially if 188 issue is there, see to it that the appropriate authority has approved the transaction. That's all. Chalo. So the auditor shall inquire into the following matters, namely, whether loans and advances made by the company on the basis of security have been properly secured and whether the terms on which they have been made are prejudicial to the interest of the company or its members. Before we even understand 143.1, let us understand one thing. This 143.1 was once upon a time 227.1a. Once upon a time, those days. And that has been there since time immemorial. This is not something new. In those days, auditors simply failed to ask certain questions, which later on came out in fraud investigation or which later on came in government investigation. Therefore, the central government said, look here, you are the auditor. Minimum you ask this question to him. So, see, this is only an inquiry. I'm not expected to report anything anywhere based on this. 143.1, nothing in my report. But tomorrow, if it transpires that the company has made loans and advances and shown them as secured, when they are not properly secured, then there is a default in 143.1. The auditor has not inquired. If you have inquired, they would have told you. Now you find out, then why you couldn't find out? This is the question. Whether transactions of the company which are represented merely by book entries are prejudicial to the interests of the company. Okay, this is a very dangerous thing. For example, I had one audit which I conducted under the instruction of the tribunal. Then, not tribunal, then it was called Company Law Board. See, the Company Law Board insisted that I should complete the audit. So I went into the books of account and I found that there were a lot of errors and there were a lot of misrepresentation. I said, I can't give a clean report. The CLB said, look here, you are the auditor. You accepted the audit. You complete it. Give us the accounts. Give us the auditors report. You qualify, no problem. So later on, you will be seeing Caro. I'm not going to deal with Caro fully. Just I will talk about Caro. Caro, 13 points. At that time, there were 15. Out of 15, 13 were qualified. And this was also, I also mentioned this. Though I have made an inquiry, I need not report it. Still, I qualified on that in my main audit report. Because there were many transactions where they have shown as if cash has been received by the company. No, and then they have written expenses. Simply they have shown cash entry, cash, say 25,000. Then that day you will find expenses. Like that they have routed money into the company as capital. So the capital has been built up using bogus transactions. Okay, like that. So that cash entry, there is no cash. Okay. Later on, you'll be seeing that also. Where the company not being an investment company or banking company, whether so much of the assets of the company as consist of shares, debentures and other securities have been sold at a price less than that at which they were purchased. See, investment company or banking company may sometimes sell at a loss because of the nature of their business. But non-investment banking company, if it has acquired shares, debentures and other securities, and it is sold at a price less than that at which they were purchased, why? Why are you selling at a loss? What is the need? Like that, you have to ask them. That's the point. Okay. These are, my dear friends, these are all inquiries. Okay. They are no reporting requirement. Whether loans and advances made by the company have been shown as deposits. So, sort of deposits seems to give you a better, feeling. Though both are unsecured. Still, classification. Loans and advances should not be classified as deposits. Right? Whether personal expenses have been charged to revenue account. You have to check out. You have to see. Basically, it's an inquiry, but of course, you should also, when you're auditing also, you'll find out. Certain expenses could be personal in nature. Why? Where it is stated in the books and documents of the company that any shares have been allotted for cash, whether cash has actually been received. Are you able to see? This is what I was talking about. There was entry, cash credit entry in the books. There is cash account data to share capital entry had been passed. But no cash was actually received. I asked, where is the cash? How did I find out no cash was actually received? Because they showed proof of expenses. They're all bogus. I asked them, why you spend so much money on this? Show me the bill. No, sir, bill is not there. MD authorized voucher is there. Hey, your MD's authorized is not enough. Where is the proof? To whom did you pay this money? Cash. And what service did you render? Where is the bill? Okay, no bill. Then that means if you are not able to produce sufficiently satisfactory bill, that means the original cash never came. You have simply shown cash entry, bogus expenses. So credit capital account, debit expenses, bring in the money. So that his capital is built up without any cash being actually received. This is one way of fraud for which inquiry has to be made. So these are 6 matters that the auditor has to inquire. Suppose he gets a negative reply, then he has to factor it into his audit. Whether he'll qualify, what he will do, he has to decide. But law forces him to ask these questions. Now, the auditor, while making the report, shall take into account the provisions of the Act. Means compliance with the Companies Act, you have to ensure whether all the provisions of the Companies Act have been complied with. So that means you cannot plead ignorance of company law. As an auditor, you cannot say, I am chartered accountant, I am expert in taxation and finance. So company law is not my area. For that only company secretary. You can't say that. Why? Because as an auditor, you are expected to ensure compliance with the Companies Act 2013. Therefore, you should be able to give this view. Okay, that's the point. And you should be able to satisfy yourself. So that is why we are insisting that you should study Companies Act in your intermediate and in your final. So technically, this is not you can think this is not a core paper, but I humbly submit to you, this is also a core paper. Don't treat it as a non-core paper. Okay, and thing. So my humble view, this is very much a core paper for you. If you are going to be in practice, then this is as much a core paper than anything else. If you are not going to be in practice, if you are going to be in service, to an extent you can plead ignorance. But even then, if you are a CFO of a company, you cannot plead absolute ignorance and say, I am not aware. You should then take proper advice. That's all. Okay. Right. So although the auditor should consider the audit, accounting and auditing standards, of which you are all experts, and under the provisions of the Act or any rules made thereunder, or under any order under any order made under section 143(11), we will see. The auditor shall so that's a separate order. That order only will sit in COL. The auditor shall express his opinion on the accounts and financial statements examined by him. So at the end of the exercise, you will express your opinion on the accounts and financial statements examined by you. Yeah, so in fact, that is exactly what I told the tribunal. I said, I mean, the for company law board, that time it was CLB, not tribunal. So I said, hey, look here, I cannot express an opinion. This thing, no, you have to express. Then I said, I'll give you qualify, you're safe. Who can prevent you? Once you qualify and give, who can stop it? Okay. He shall express an opinion that according to him, to the best of his information and knowledge, whether the said, he shall express an opinion according to him and to the best of his information and knowledge, whether the said accounts, financial statements give a true and fair view of the state of the company's affairs as at the end of its financial year, and profit or loss and cash flow for the year, and such other matters as may be prescribed. So you give your opinion on the balance sheet as at the end of the year, P&L and cash flow for the year. Then once you give that, automatically the notes and accounts are set, which are forming annexed to the P&L balance sheet P&L, the cash flow notes, statement of changes in equity. The whole bunch, you are expressing your opinion. What are you expressing? They give a true and fair view of the state of the company's affairs. True and fair. I already explained why it is not true and correct, and it is true and fair. Am I correct? Because you are making certain estimates. You are, see, yeah, in fact, you cannot say, how can you have any mistake in sales and purchases? Yeah. You cannot say sales and purchase will be inaccurate, still I will certify. No, there it should be correct. But still the word fair is used because we do make estimates. We do make notional estimates. Depreciation, lifetime of the asset estimated. Intellectual property rights. how long will they give the revenue streams, so that I can find out how long I can carry it in the balance sheet. Estimation. Stock valuation is not an estimation. Stock valuation is not an estimation. It is a fact. It has to be correct. Because stock valuation is based on what you purchased and what the opening stock. It's an arithmetical calculation. You cannot see, there is no estimation there. Provisioning, there could be an element of estimation. For example, when I'm making a provision, I may not exactly know that you enjoyed only 15 days work. Especially when I'm accounting prepaid and all that, I'm using yardstick of number of days. So it is not as if insurance premium will accrue day by day. Doesn't happen that way. But I'm making an assumption that insurance premium is incurred day by day. And then I'm saying on 31st March, I will see what is the unexpired portion of insurance, and accordingly create a prepaid insurance asset. Now that is an estimation. It's not based on any exact, nothing. There's no such thing. So in those cases, we are making certain risks. We are making certain assumptions. That is why we say true and fair and not true and correct. Inherent risk is always there. I don't know what that means. If you think there is an inherent risk, then my suggestion, avoid it. Don't go there. Your goal as an auditor should be to make that inherent risk nil. When at the time when you are certifying, you should be jolly well sure. Otherwise, don't certify. If you are not sure, don't certify. Okay, everything you should have, and thereafter you should have qualified or given a management report. If you feel it is not material, if you feel it is material, and you say there is an inherent risk and sign a wrong balance sheet, sorry, such risk is not acceptable to me, or nor should it be acceptable to you. Okay, even if you are following SA 315, be careful. Okay, what audit risk? How much? See, that is the risk of not reporting. If it is very high, then I would not say it is inherent. Okay. Still, of course, that is why we are saying to the best of your information and the knowledge. Nowhere you are saying to the best of his information and knowledge and belief, or to the best of his knowledge and belief. Brother, there is no belief in auditing. Sorry, you can't believe what he says. As an auditor, you are not going to be paid to believe. You are going to be paid to know. Right. Knowledge is one thing, sir. I know very, very few things, sir. It's a little bit esoteric. Try to understand what I'm saying. I know means I should have personal knowledge. I should have seen it. Are you able to understand? So to some extent, it is based on information only. Am I correct? So based on that. Ideally, everything you certify should be knowledge. But in some cases, since you are auditing post the event, it may not be knowledge. It has to be only information. And you have to rely on that. Then you have to correlate it with certain other external evidences, so that you will ultimately end up with, your true and fair view. Material means, material, not institute ka material, or material as in direct material, labor and all. Material means significant. I will repeat. Material means significant. Okay. For example, you have discovered an error in purchases. You audited almost going, you have signed and all. Finally, suddenly you discover that one bill, purchase bill, GRN was received. We have forgotten to make a provision for it. We have not made the provision for it. The amount involved is 15,000 rupees, 15,000 rupees. The turnover of the company is 15 crore. The amount left out is 15,000. Of course, the subsequent year, the bill has come, the bill could have been accounted and all. It is not that it is left out of the system. It's just that it was accounted in April or May. During your audit, neither the auditee nor you, it got missed, yeah. And later on, it comes to knowledge and 15,000 rupees. Is it material? Is it significant? Yeah. Is it significant for making decision? Not only that, is it significant? So for that, what you should do is you should see the overall turnover, or suppose you are looking at, say, particular expense. Even you take purchases, forget the sales 15 crore. Maybe the purchase is 12 crore. Out of the 12 crore purchases, this 15,000, how material is it? So you should have your own materiality yardstick. Institute has not prescribed any absolute materiality yardstick. The auditor has to use his discretion for what is material and what is not material. Okay. So, yeah. I gave an extreme example. See, suppose the turnover is 15 lakhs, 15 crore, okay, you are all agreeing it is not material. Don't say immaterial, sir. Say not material. I hope you got the difference, Mr. Alok Shivlani. There is a difference between immaterial and not material. Immaterial means not worthy of consideration. That is immaterial, like that. It is not worthy of consideration. Whereas not material means not significant. Now, it will not affect the decision in any way. A shareholder will not have a wrong idea about the profit because of this 15,000. Okay. The profit would still be fairly in the ballpark. It would not be way out of the ballpark because of this. You can create some benchmarks. Every audit will differ. Every audit will differ. Materiality yardsticks will differ. And mindset of the auditor is also there. Audit is also there, etc. And so that for me, in my case, my materiality yardstick may be pretty high. I might say, let's say that's not a big thing for me. But there are auditors, 5 paisa, they will go around hunting, breaking their head, not knowing what to do, running around like a chicken without a head. They will run around, not knowing what to do. It's okay. That is this stringent control. Okay. Yeah, it is a matter of professional judgment. Absolutely. Now, in the audit report, the auditor should say, I'm surprised that Aslam is writing down all these things. What are you trying to do here? I'm sharing I'm going to upload this. It is all going to come to you. Anyway, if you are writing it out, chalo. Right, good. But also listen to what I'm saying. See, Aslam must be having 8 hands. Yeah, 1 hand is, 2 hands he is writing. Then with 2 hands he is giving comment also. On the computer, on his mobile, whatever. Okay. Anyway, the auditor should, in his audit report, the auditor should mention this. Whether he has sought and obtained all the information and explanation, which to the best of his knowledge and belief, here there is a belief, were necessary for the purpose of his audit. See, he honestly believed that these informational explanations were needed, and he sought and obtained all the information and explanations which to the best of his knowledge and belief were necessary for the purpose of his audit. If not, the details thereof and the effect of such information on the financial statements. Okay, which is rare. Which auditor will say, I have obtained all the information except this one, which will impact. That means that you have not conducted an audit here. If you needed it, then why you have not asked for it? Okay. So you should ask, which is why you have to be very, very careful. Whether in his opinion, proper books of account as required by law have been kept by the company. See, so far as appears from his examination of those books, and proper returns and adequate for the purpose have been received from branches. So the word, I'm highlighting some words, proper books of account, proper, not some casual books of account, which is why, the accounting software that they use, I'll be very, very particular. For example, today, although the time duration has been pushed, as was correctly advised to me, the account should have an audit trail. Okay. See, it is not statutory. Statute has, thanks to our great finance minister, who is a very great fan of extension, it got extended, agreed. But even without that, as a member of my institute or our institute, you should ensure that there is an audit trail. Because it is part of your verification of the internal control systems. You are not doing it because the stupid companies that tells you. You are doing it because that's part of your audit planning. You cannot have, if the audit trail is not there, there is a serious internal control weakness. It means that anybody can go and change anything and it won't be recorded. Any change made should be recorded. And if it is an online system, any change should be recorded. And it should not be capable of being deleted. So I should know who made that change and when it was made. At any stage, I should be able to go back and look at the audit trail. See, software have the capability, or you should use the software having the capability. Otherwise, it is an internal control weakness. I'm telling you today, even if the NCA is not implementing it, I would say it is a serious internal weakness. Okay. Whether how to make the changes, if the changes are made, who will track it? How do I know that you didn't make any changes? I have to be, which means once I'm saying that is your audit trail is not there, my controls have to become different. I have to put so many compensatory controls there to account for the possibility that you would have meddled with the accounts. Whether the report on the accounts of any branch office audited under subsection 8 have been received and sent to him, and how you have dealt with it in preparing your, right? Whether I was a branch, branches mostly bank, we are mostly branch auditors. When I was auditing the branch of a large branch of a well-known bank, which I obviously cannot name, branch auditors, many of us we qualified, but they were all materiality. All our qualifications were thrown out on materiality grounds because we were doing at the branch. Whereas, look here, at the branch level, I have reported it. Now I can't do anything about it. As a branch auditor, my hands are tied. I have to report to you and pray to God. Or once I report to you and get your acknowledgement, I am protected. After that, how did you deal with it in your report? You go and answer to the CBI. When the CBI came with the inquiry, they do too many reasons. Whether the company's balance sheet and P&L account dealt with in the report are in agreement with the books of account and returns. Agreement. Okay. Means whether what you are signing is there in the ledger finally. You see, in many cases, what you would have done now for small companies and medium companies, you would have made a lot of adjustments for which ideally you should have tracked it using journal entries. So as and when you make an adjustment in the balance sheet or P&L account, as part of the audit, and the audit is also accepting, a journal entry should be passed. Okay. So all the journal entries should be tracked. And finally, you should pass those journal entries on the last date and then close the books and then lock it so that later on no change can be made in the balance sheet and P&L account by changing the accounts. I always do that. Once the audit is over, then all the audit team responsibility is completed only when all the entries suggested during audit and accepted by the auditee have been passed, recorded, and the accounts have been updated, and a final set has been printed, which tallies, or PDF is there, which tallies with the signed balance sheet. Then the accounts are locked. After that, no change. You can't go back and change anything. We will inform the auditee and say, this is it. This could happen sometime in November or December. Late, because AGM would be over. Then we'll say, look here, last year accounts are going to be locked. No more changes. I mean, why you want to change? After all, I have audited. Why you want to go and change now? So we will lock it. We will make them lock it and see that the lock is set. So that after that, if anybody breaks that lock and opens that lock and makes any entry, audit trail will tell me. That is why audit trail becomes very important. Okay. So that at any time, the books of account should be in agreement with my balance sheet and P&L account. Because in the balance sheet, you know what I'm saying? Audit report. In the audit report, I'm certifying the balance sheet. Now, in the balance sheet, what I'm telling, this is the balance sheet referred to in my report as of event date. This is the balance sheet referred to in my report as of event date. If the crooked directors of that company print some other balance sheet based on some other falsified ledger, they can do so. I cannot prevent them. They can even forge my signature. But suppose later on that bank or whoever that Bakra who took the balance sheet comes to me and says, hey, you signed this balance sheet. It's fraud. Hello, I didn't sign this balance sheet. See, I've got another balance sheet signed by the directors. Their signatures are not forged. This is my signature. Check my signature with that signature. It's a forged signature. So this is the balance sheet referred to in my report as of event date. You should have come to me and taken, or you should have gone to the MCA site and taken. How you can take from him and then say it's mine? No. Today, believe me, the greater protection for me is UDIN. The greater protection for me is UDIN because UDIN closes it. Once I generate the UDIN and upload, that's it. Nobody can catch me after that because, boss, if you got any document, show me the UDIN. When did you generate the UDIN? Where is my digital signature? So if my digital signature is affixed, where is the UDIN? Is the question. Very good. So I'm just giving you this background information to help you understand. Okay. Whether in his opinion, the financial statements comply with the accounting standards. Agreed. The observations or comments of the auditors on financial transactions or matters which may have any adverse effect on the functioning of the company. In case such things are there, you can. Otherwise, you can ignore it. Whether any director is disqualified from being appointed as a director under subsection 2 of section 164. This section is in your final syllabus, wherein there are certain grounds for disqualification. Just like disqualifications are there for the auditor, similarly, there are disqualifications for directors. You are supposed to report whether any director is disqualified under 164.2. Means 164.2 disqualification will happen only if there is a failure to file the annual return and financial statement for 3 consecutive financial years. Also, if there is a default in repayment of dividend, debenture with interest, deposits with interest. If there is any default, then that will be automatically the directors will be disqualified. So you as an auditor have to verify whether the company has not filed the annual return and balance sheet for 3 consecutive financial years. If the 3rd consecutive financial year has happened, then the directors are disqualified. Similarly, if there is any default and 1 year has not elapsed and it has not been rectified, then you can report. Then you should report in your that so-and-so directors, so all these directors are disqualified. But that will happen rarely, because by then somebody would have pointed out and they would have made good that. But still, it is your job to report. So this becomes the authoritative proof whether there is any disqualification under 164.2. Any qualification, reservation, or adverse remark relating to the maintenance of account and other matters connected therewith. If you want, you can. Okay, as to maintenance of accounts. Whether the company has adequate internal financial controls with reference to financial statements in place and the operating effectiveness. That is, internal financial controls with reference to the financial statements, the way in which they are accounted and prepared. And such other matters as may be described. Where any of the above matters is answered in negative or with a qualification, you should state the reason. Not only the reason, you should also give a quantification of the impact on the profit. For the purpose of 143.3.1, for the financial years commencing on or after 1/4/2015, the report of the auditor shall state about existence of internal financial controls with reference to financial statements and its operating effectiveness. So this came into effect only on 1/4. That if you want, the auditor can give even for 1/4/2014. That is 31/3/2014. If you want, you can give. 15 compulsory. Okay. So now it's compulsory. Now, a private company is exempted from 143.3.1. I'm sorry, 143.3.I. That is not 143.3.I. Whether the company has adequate internal financial controls with reference to. This report this clause is not applicable to a private company if it is a one-person company or a small company. If it has a turnover of less than 50 crores, if it has aggregate borrowings from banks or financial institutions or any body corporate at any point of time during the financial year, less than 25 crores. If a private company satisfies one of these criteria, then the auditor need not report about internal financial controls on financial statements. Okay. Now, Rule 11 of the Companies Audit and Auditors Rules 2014. The Auditors Report shall also include their views and comments, in addition to the others. This also, whether the company has disclosed the impact, if any, of pending litigation on its financial position in its financial statement. Pending litigations. See, you are giving the impact here. You should also disclose it in contingent if it is relevant. Okay. In case that you lose that case, what will be the impact? Also has made provision as required under any law or accounting standard for material foreseeable losses, if any, on long-term contracts, including derivative contracts. Suppose, as on the balance sheet date, the strike date has not happened. Okay. Still, at that time, there is a loss. It is a foreseeable loss. Okay. If it is required to be provided, have you made a provision under the accounting standard? Let's see. Suppose the loss is not yet incurred because it may happen only when the strike date comes. But today it's in loss. It's out of the money. Okay, derivative contract. So how are you going to deal? Of course, see, if you are abroad, if you are applying IFRS, it's straight away mark to market, straight away. Or India is it's straight away mark to market. You have to account it. But you have to comply with it, is the point. Has delayed in transferring amounts required to be transferred to the IEPF by the company. In case any amount is to be transferred to the IEPF, if there is a delay, the auditor should report it. This is an addition to the normal reporting. This is an addition. The idea is highlighted. So these items are given as line items so that the MCA will look at it. Has provided requisite disclosures in the financial statement as to holding as well as dealings in specific bank notes during the period from 8/11 to 30/12. As you remember, on the 7th November 2016, our great enlightened Prime Minister came on the television and told us that the 500 and 1,000 rupee notes are demonetized and that they are no longer valid tender. They were called specified bank notes, and you are not allowed to deal with them, and demonetization as it was called. And so after that, from 8 to 30, only certain specialized entities could receive. For example, petrol bunks, banks only could receive these notes. Others cannot receive these notes. So any other than that, how did you deal with it? Did you receive it after the 8th? It's a violation of the law. You can't. So that has to be reported with the auditor. That's the point. Anyway. Now, they are also insisting here that every auditor shall comply with the auditing standards. Now it has become statutory for me, right? I have to comply with the auditing standards because NFRA is now getting into the picture. So they are going to, so auditing standards. But I am not complying with the audit standards because MCA is telling me. I am complying with the auditing standards because that is the correct way of doing my audit. These are auditing standards. It is developed by the Institute of Chartered Accountants of India. We, the auditors, have developed for our own protection. I don't need an MCA to come and tell me what is auditing standard and that I should follow the auditing standard. Okay, I will jolly well follow the auditing standards, right? There's no other way because it is in our own interest to follow the auditing standards. I hope I'm making a point. But to be on the safer side, they have put every auditor shall comply. They are remembering what happened in Satyam case. Because one auditor did not comply with the auditing standards, they are saying every auditor shall comply with the auditing standards. Like that. Chalo, we will comply. This leads to nitpicking interpretations of the auditing standards. See, some of you, because you are all studying, you would be very thorough with the auditing standards. Letter by letter, you will know. Every word you will know. But when you actually come for audit only, you will understand how complicated it can be. Okay. So then especially some of you who are experts in asking question, you will end up only asking question in auditing standard. You will never understand auditing standard because most of the auditing standard issues are judgmental. In fact, the one man who usually asks the question, he told very clearly, professional judgment of the auditor, like that, correctly said. Somewhere a professional judgment is applied and that no government official can understand what is a professional judgment. Every time I sign a balance sheet, I take a risk and I sign. That risk I am willing to take because I have protected myself. Otherwise, I cannot take that risk. I know how to protect myself. I know how to ensure that I can give a report. Okay, that no government official can tell me how to conduct an audit. If so, then my humble suggestion to the government officer who is advising me on auditing standard is, Baba, you complete my exam. You come and write my exam, become a member of my institute. Then you tell me, I will listen. If you are my auditing standards board, and if you are telling me, I will listen to you. Central Council, I will listen to you. You are not a chartered accountant. Now I can listen to you. It is like a non-medical practitioner telling a doctor, when you are operating, you should be following all the standards prescribed by medical council. Hey, boss, I'm a doctor. I am a member of the medical council. I did it. Okay, I am part of that. We know what we are doing. We only prescribed it. You don't tell me I have to follow it. Okay, is the point. I mean, this sounds very, very arrogant, but the fact remains, okay, that you didn't prescribe it. You cannot, if you want to prescribe it, become a member. And then go there and then tell, we will listen. Is the point. You should have experience. Minimum, you should have 20 years of experience in auditing. And you should know what is audit and how an audit is conducted. Then maybe, yes, you can talk and I can listen. Is the point. The central government may prescribe the standards of auditing of any addendum thereto, as recommended by the ICAI in consultation with and after examination of the recommendations made by the NFRA. Okay, glorious, great, wonderful. Thank you, Mr. NFRA. It is further provided that until any auditing standards are notified, any standard or standards of auditing specified by the ICAI shall be deemed to be the auditing standards. Thank you. Now, moving on. In respect of certain class of companies or description of companies, as may be specified, central government may give further points to be specified in a separate audit. The audit report shall also include an annexure, wherein this is called CARO, Companies Auditors Report Order. Companies Auditors Report Order, CARO 2016. Companies Auditors Report Order 2016. Okay, which has been recently also 2020. It has been further amended. Okay, and so this will be more relevant for you in because of pandemic. They kept pushing it. Now it is applicable. From 23 onward, 22 onwards, it is 23 onwards, it is applicable. You have to comply with the new CARO. That's the point. Thanks to pandemic, and our finance minister's eagerness to extend whenever a chance comes, she will extend it. So everything will be extended. So now we have completed the reporting requirements of a auditor, and so I think. Manoj Kumar Thakurji, you are asking a nice question. That is, better to take self-declaration from the directors that they are not. No. That you cannot take self-declaration. Why I am telling you? 164.2 is not a opinion. It is a fact. See, unfortunately, this section is not there in your syllabus. When you come to 164.2, this will not be in your syllabus. 143.3 will not be in the syllabus, but it will be there and you will try to correlate. See, what is 164.2? The company has not made any default for 3 continuous consecutive financial years in filing annual report and annual return and balance sheet financial statement. This has to be verified by you, whether the company has filed. This year, they would file only later. So last year, if they have not filed it, and that is the 3rd consecutive year, then gone. You have to qualify. Straight away, you have to inform the thing. Similarly, the company has not made any default in payment of dividend or deposit with interest or debenture and all. And that default has continued for more than 1 year. So if 1 year has expired during your audit period, then you have to report it. This is not something where you can take a declaration from the directors. Are you able to understand? You cannot take a declaration. Self-declaration cannot. In fact, don't say self-declaration. Say declaration. Self-declaration means they give themselves to the government. Here they are giving a declaration to us. Okay, not possible. Okay, I mean they can give a number of declarations. In this case, it won't work. See, if I have failed to verify and they are disqualified and they have given a self-declaration, as you say, that we are not disqualified, I am not escaping. My liability is still there. Okay. Thank you, Mr. Abdul, for that nice emoji there. I'm happy. Now we will move on to reporting of frauds by auditors. Reporting of fraud by auditor. For this, you have to go back to one famous quotation. Famous quotation. Kingston Cotton Mills case. Kingston Cotton Mills case where, famous line. Auditor is a watchdog, not a bloodhound. By which what we used to say was, we are only here to audit. We are not here to find out fraud. We are a watchdog. We are ensuring that everything is there. We are not a bloodhound. So either way, audit is a dog, according to the court. Okay, either a watchdog or a bloodhound. Bloodhound means a police dog, which will sniff out the criminals and bring them out. Whereas watchdog will only be waiting. In case there is inquiry, to bark and inform, hey, there's a problem here, be careful, like that. But bloodhound is not like that. It has to go in and discover. And finally, if anything is stolen, it will find out and come. They are trained for that. The bloodhounds, the police dogs. Okay, is the point. So, now why I gave this elaborate explanation to Manoj Kumar Thakur, no? You should understand what is your responsibility as an auditor. See, many times, I find in auditing, they will say, take a declaration from management, take a declaration from management. Then why don't you take one single declaration from management? All the accounts are true and fair, and then you certify. Not possible, sir. That is the whole point of an audit. You have to satisfy yourself. So in God I trust. In God I trust. Others I simply audit. Okay, no, I don't believe. In God I believe. God I believe. But others, sorry, I audit. Okay. Now, so whether the auditor is a watchdog or bloodhound, for a long time it was considered to be that. But later on, Lord Denning, sort of said that is not the role of an auditor. The auditor should make diligent audit. And in the course of the performance of his duties as auditor, see, this is Lord Denning's view, now converted into law. The Act says, you are conducting an audit. In the course of performance of your duties as auditor, you come across something, you have reason to believe that an offense involving fraud, which involves or is expected to involve individually an amount of rupees 1 crore or above, is being or has been committed against the company. Either it is being continuous fraud or over. Fraud is over, but you have come across it. More than 1 crore. See, it is possible. Sometimes we will come across it. See, I'll tell you, if you have enough experience, you can sniff it out. You are a bloodhound. Something will tell you, hey, this is not something wrong. Yeah, the evidence is not gelling. Like that, you will then go deeper. And once you go deeper and shake it, now it's like a tooth, it's slightly loose, you press it, it will break. So it's rotten. So that means there's a problem, cavity. Then so you have to be. So in those cases, a little bit of push will destroy. Okay, like you have to be very, very careful about it. In fact, sometimes I'm early stages of my auditing life. Yes, I used to have some clients who were dicey, and I used to come across. And in those cases, at that time there was no compulsion for me to report the fraud. Okay, though of course I would inform the board, and I will highlight it and go. But there was no duty to inform. Again, please note the words, is being or has been committed against the company by officers or employees of the company. He shall immediately report the matter to the central government. Now, 143.12, it was such a similar provision was not there in the 56 law. It is a clear-cut introduction in the 2013 Act and a clear-cut Satyam reaction. Because in Satyam, what happened? There was a fraud. Auditor was obviously knowing about it, but he said, I don't know. But how you cannot know? So you would have come across the fraud earlier, na? Why you didn't report it? So Ramalinga Raju was an officer who was committing a fraud against the company. The Satyam. Satyam is different from Ramalinga Raju. Satyam Computers Limited is owned by the shareholders of Satyam, of which Ramalinga Raju is one. So, as an officer of the company, Ramalinga Raju was committing a fraud in terms of reporting wrong financials. Now, the auditor was there at that time. Why he did not immediately report? Because there was no need to. Now they are saying, no, you are the auditor, you know about it, and you have keep your mouth shut. Tomorrow we discover the fraud, you are going to jail along with him. Straight away. Because your duty to report we have created. 143.12, that way puts a big, shall we say, control on the auditor's duty to report fraud about which he is aware. See, if it is a deeply laid collusive fraud, which is very difficult to find out, you can say, look here, I checked and I got all these documents. On the face of it, even you will think it is. It is only because of some other activity which come to light, some other place that you got to know about this. That information I had no access. You are having access. As CBI, you are having access. I don't have access. What was produced to me, I verified. I got confirmation. Everything I got correctly. And that is not forged. What I got is not, unlike Satyam case, where the bank confirmation itself was forged by Satyam. Here it's not forged. I verified that it is coming from him. I ensured that it comes from him. That way I'm confident. That fellow also given false. That I'm not aware. See, as I'm auditing this fellow, I can go to the third party and get confirmation. If the third party is also collusively defrauding, how can I know about it? You found it because you investigated both of them. Now you can come and catch my collar and say, why you didn't report. I could not have. So in those cases, collusively I cannot do. But if it is something that this fellow has done, which I could have easily found out in the course of the performance of my duty as auditor, then, and the fraud involves rupees 1 crore or more, I have to immediately report the matter to central government. See the beauty of our MCA language. Huh? He shall immediately report the matter to central government within such time and in such manner as may be prescribed. Baba, you are telling immediately. Then where is the question of in time and in such manner? Then what you should say, he shall report the matter to the central government within such time and in such manner. But see, they want to somehow catch the auditor. So immediately. Immediately means immediately. That is, the minute I come to know about it, I should immediately inform you. But time is given. I can't obviously report it day after tomorrow. Time is given. In case of fraud involving less than rupees 1 crore, the auditor shall report the matter to audit committee. Then the audit committee should take it up to the board. So the auditor shall report to the board. This is the matter. The auditor shall report to the board. Maybe means discretionary power of the central government to prescribe. If whenever they want, they can prescribe. Sometimes they don't prescribe also. They are not prescribed. When they want, they will prescribe. They are given the power. See, rule-making power is a discretionary power given to the central government. On receipt of reply, see, once the auditor shall report to the board within 2 days of his knowledge, seeking reply or observations within 45 days. Again, be careful. Simply because you've discovered something like a fraud, you cannot go. Sir, you have to collect evidence. You should be 100% strong. Everything should be locked. Every document should be available with you. Proof should be there. Without proof, if you go around blowing the whistle, as somebody is saying, whistleblower. Actually, Mr. Patsa, the whistle blowing is done only by employees. To my knowledge, the auditor need not blow whistle. He's got his own. See, you have officially got a route to go. Why? Whistle blowing is a method where employee will tell without revealing the identity. Whistle blowing is within the organization. There will be the audit committee will be encouraging whistle blowing. So any whistleblower can anonymously report to the audit committee or to a director designated for the purpose. Right? But auditor need not know whistleblowing. As an auditor, you can report. Why whistleblowing? Auditor does not make legal determination of whether fraud has actually occurred when how auditor will know about fraud. See, sir, that we will know, sir. See, once, if you are experienced enough, the minute we see the paper, we will know. The vouchers and all, we will know that there is a fraud. Clearly, disproportionate expense, not supported by sufficiently convincing evidence. If you have got minimum 10 years, 5 years experience to 7 years experience, you will be able. Now you will not know. You are a student. At this stage, you will not know. With that experience, just by looking at it, I will tell. Matter of 2 minutes, I'll say, hey, go on, this expense, check that. That is where the fraud is. Because I know what they have done and how they have done it and why they have done it. Go and find out. Like that we can tell. That much, see, that much expertise is, see, we are a profession, right? This is not something textbook where you read and you vomit and you become a graduate. No, we are a profession, sir. It is much more than the bookish knowledge that you acquire by studying all this and writing the exam. We have a lot of practical experience as practitioners, which is why we ask you to do 3 years of articles. Only during the 3 years, you will really understand the difference between what you learned in the... There's no big difference in content. But in terms of application, in terms of correlation, in terms of putting the holistic picture and looking at this situation, that is what you learn in articleship, ideally. And that is what you should like to learn in auditing. Okay? So, in your articleship period. Prescribed means made official. Prescribed means the central government will inform officially through notification. So the method, see the manner in which it should be done, should be prescribed. Usually the prescription will be in the rule. For example, prescribed manner means the officially described or officially stated manner. So that is what the meaning of prescribed. Okay. So the procedure is auditor shall report to the board, then asking for their reply within 45 days. On receipt of the reply, he will send it to the CG along with comments within 15 days of receipt. Or if there is no receipt from the board on the expiry of 45 days, he will forward the report directly to the CG along with a note of report sent to board. So this is an extreme case. If somebody is going to ask me, I'm going to be in deep shit. Suppose somebody puts a question saying, do you know any company where the auditor has done like this? To my knowledge, no. To my knowledge, no. If you know, kindly inform. I am not aware. Maybe if Aslam or Abdul know of any company where the auditor has reported fraud. Okay. Don't say immediately Adani, because there the auditor has not reported any fraud. Okay. Don't say immediately. The only thought that will come to your mind is Adani. In Adani, no fraud was reported by the auditor. In fact, there is no fraud, period. Okay. As of now. What do you mean by board of the company? Question mark, sir. I'm not able to understand your question. Board of the company. Board means the board of directors of the company. The board of directors of the company. Directors and a board. Now the report shall be sent to the MCA secretary. See, MCA secretary is not private secretary. The secretary is the top man there. The ministry of all. See, every minister will have a secretary. Are you able to understand what I'm saying? That secretary will be a top IAS officer or ICS officer, who will be a very, very powerful gentleman. This will go to the report, will go to the MCA secretary. Below him, he'll have people, people under secretaries, deputy secretaries and all, who will go through this. And then it will become a big issue. Sir, auditor of Adani has sent a report, sir, and he's saying fraud. What to do, sir? What to do, sir? Everybody will be running around like headless chicken. Okay. See what I mean by headless chicken? No, when you cut the chicken's head, still it will not accept that it is dead. So it will still start running around in circle, even though it is dead. It will take a little bit for the message to go to that there is no brain before the chicken will fall. And so that is called going around like a headless chicken. Okay. So they will all be running around because headless chicken does not know what to do. Like that, all these secretaries will be running around not knowing what to do, because how to take this up, how to do this like that. That one auditor will become a king. As of now, no auditor has reported fraud. I have yet to see. I am not aware. Okay. Not a cabinet secretary. Cabinet secretary is slightly different. Cabinet secretary is different. This is a secretary who is an IAS officer, or in this case, it would be an Indian corporate service officer. Okay. See, actually, Adani and Hindenburg, there is no real story. This is possibly not the forum also for me to tell. There are certain, of course, solvency issues are there, sir. Adani has solvency issues. But whether Mr. Hindenburg wantedly, the suspicion is that Mr. Hindenburg was doing a report on Adani about their ability to repay the loans, that there is a solvency problem with Adani, that Adani may not be able to service. He released that report. The suspicion is that before releasing the report, Hindenburg, being an investor also, sold through related companies and some nexus, he sold the shares of Adani. So that after releasing the report, the price fell, Adani bought it. In this, even another gentleman called Soros, who is a famous share market investor, and especially they are into shorting. That is, they will release information negatively about a company, and then they would sell it and then release and then buy it again when the price goes down. So the general view is that Adani, there is no problem, and they are capable of, in fact, subsequently, all the banks have confirmed that Adani can pay and they have no worries about this, and some of them have confirmed it, and some of them have said that is not affecting us in any way. For example, LIC and all have confirmed that this will not affect us in any way, like that. They have come out. Even if Adani doesn't pay, we are safe, like that. They have told. So this is the Adani story. See, if you ask me honestly, bigger thing is, the whole thing is linked to somewhere to politics. So I don't want to go there and waste your time. But yes, somebody had raised another question earlier, which I did not answer. Sir, what is crony capitalism? Crony capitalism. See, capitalism is the highest ideal of human endeavor. Capitalism, highest ideal of human endeavor, where human beings who are capable of generating the best outcome only when they are given full freedom to take decisions. So entrepreneurs should be given full freedom. Government should not interfere with entrepreneur or his decision-making power. If you want to provide support, even, sir, government need not provide any facility, sir. Just give the entrepreneur freedom to work and don't trouble him. Just monitor whether he is complying. Compliance alone you verify. Otherwise, give him full head of freedom to go. This is the spirit of capitalism with which most free market economies work. But in third world countries like India, the government definitely favors certain entrepreneurs and does not favor others, depending on many equations. Individual not know. So when a certain group of entrepreneurs are favored by the then government, that is called crony capitalism. It is not as if any government is not guilty of it. All governments are guilty of it. Okay, all governments are guilty of it. The only thing is the capitalist who was favored was different. Only one man was favored by all governments, and that was the great Dhirubhai. Okay, he was favored by all governments. But other than that, there would be favored by one, favored by another, like that. There would be. That's called crony capitalism. Adani is part and parcel of crony capitalism. Therefore, the financial results of Adani cannot be relied upon is the final conclusion I would like to give at this stage. In my view, it cannot be relied upon. And I would prefer not to comment more than this. Okay. Japan, USA, Japan, Australia, UK, most of Europe, they are all capitalist. Okay. Even Russia is today a capitalistic country. Only China continues to claim that it is communist. Okay. Anyway, let's not get into the politics of it. I just want to give my view since somebody asked. So, SEBI does not have any right to conduct any audit. Why SEBI? Our MCA has the power. Why SEBI? Later on, you will find under the Companies Act, the Ministry of Corporate Affairs has the right power to conduct an investigation. Studying it when you come to investigation. In final, separate topic is there. Investigation where SFIO is there. Serious Fraud Investigation Office is there. MCA itself is there. It's got directors, investigation and all. They can do. They even know they can go and do. Who's preventing them? Who's preventing them? Okay. Yeah. Great. So, I'm also a great fan of Dhirubhai. And he was also guilty of using crony capitalism. But again, he did it for the benefit of all the shareholders. That is only saving grace for Dhirubhai. That's all. Okay. Right. So the MCA secretary receives it in a sealed cover and then he opens it. The report shall be on the letterhead of the auditor and be signed by the auditor with his seal and shall indicate his membership number. That is why I'm saying this will not come under whistleblower. In whistleblower, identity will be concealed. Here, how can the identity be concealed? Okay. The report shall be in the form of a statement as specified in Form ADT 4. Okay. Then, where the matter is less than 1 crore, then you have to report it to the board. That is 1 crore. If it is less than the 1 crore, you have to report it to the board with what is the approximate amount involved, parties involved. Matter to be disclosed in board's report. See, if it is less than 1 crore, the nature of fraud, approximate amount involved, parties involved, if remedial action not taken, and remedial action taken. Okay. Now, see, first of all, one important thing, auditors are bound to maintain confidentiality. That is, whatever is told to you during an audit, you are not supposed to reveal. That is part of confidentiality. But here, under the statute, you are forced to make a disclosure to the ministry. So they are saying, where an auditor reports a fraud in good faith, in accordance with subsection 12 of 143, he shall not be regarded as having contravened any duty of confidentiality. Suppose during the course of the audit, the auditor has discovered any fraud, then he can please report please just check up your thing, madam. It could be something to do with your side. Okay. Yeah. Just check up before you, because I can't do anything about it. Sitting here, I can't do anything about your screen. I'm doing my best to. Now, is it better visible? Is it visible? Just check. Okay. Yeah. In some cases where the fraud is less than 1 crore, you report to the audit committee, right? Some of you, especially I think Dhyanesh, will be eager for a break. I will give a break in another 5 minutes. I will give a break. Sir, I know how to audit, sir. I don't know auditing standards, but I know how to audit. Unlike, you will be aware of the auditing standard page by page, letter by letter. Mujhe nahi malum, but don't worry, I will audit. I will after I have audited, the auditee will know that I have audited him. In fact, one of my favorite comments to my auditee accounts department, finance department is, when I take up the audit, we will give them 59 questions. 59 questions will go. Those, we will tell them, we are now giving these questions to you in May. The whole year is ahead of you. Don't worry. You ensure that you are capable of answering those 59 questions. I will come in August. Tell me where you are. And I will tell them one more thing. This audit can be a very, very painless process if you don't shake. If you do what I say, if you give me the information that I want correctly, and you satisfy me that everything is in order, it will be a painless process. If you keep shaking, jumping, doing this, that, it will be painful to you. Check out. This is what I would, in the presence of the board of directors itself, the MD, I will say, MD will also laugh and say, Mr. Srikanth, what you're telling, you heard the auditor, my dear friends. Cooperate, painless. Don't cooperate, delay, waste my time, give bullshit replies and all. It will become painful for you. Check it out. There are two options. When I'm asking a question, give a fair reply. Give supporting data. Give the truth. Then let me be the judge of what to do with it, how to do with it. But you don't decide what you are supposed to tell me. I will decide what I'm supposed to do. You give me the truth, and nothing but the truth is the point. So this is how I even begin an audit, thereby giving the clear information that, look here, don't play games. I'm not here to listen to your bullshit or play games with you. I'm here to audit and go. Don't waste my time. Don't waste your time. I can't share those 59 questions. Yeah, that is my. Can you go to a partner, Pricewaterhouse, and ask him to give all that? Sir, can you share all your data with us like that? Like that. For me, that is my firm's IPR. How can I give it to you? Okay. Sorry, I'm sounding very thing. That was developed across 25 years of my experience. I have developed those questions. If properly answered those, many times accounts department will go shivering. They'll go into cold shiver because they thought audit means they can give some bullshit, all these auditing standards, blah, blah. They will go, they will waste their time and then run away like that, audit documentation like that. We'll hit them with the spear and hold them where they will be shaking. They can't move. If you tell the truth, you are escaping. If you don't tell the truth, you will be caught. I mean, I'm not boasting. I'm saying experience is the difference. Okay, it's the experience is the difference. When I was a rookie auditor working in Pricewaterhouse, okay, then I knew what is what. Then I learned. Then over a period of time, I have understood what is auditing, how to audit, and that is now in these 59 questions. In fact, one MD of a company went through those 59 questions and said, Srikanth, if only I can ask these 59 questions to my people, I can be satisfied that my company is running correctly. So that is exactly what I'm doing, sir, as your auditor, verifying whether your company is being run correctly during the last year. Then many people, many MDs have adopted my questions as some sort of a control mechanism and reporting mechanism for themselves. Which is exactly what I want. You monitor it on a monthly basis, I'll do it on an annual basis. That's all. Chalo. Now, Mr. Aslam says no break. But Mr. Aslam is a god. We are all ordinary human beings. So, ordinary human beings like us will take a small break. So that is, we will, yeah, some questions are there. I will answer it after the break. Now the time is roughly 7:45. So 10 minutes ka break till 7:55. Enjoy the break, biology break or whatever, and we can come back. Sir, small break, sir. Welcome back from your well-deserved break, and let's see some of the questions that have been asked before we get into audit of government companies. Can you show my firm name at this stage? No, please. Because as you know, you will yourself then accuse me of violating auditing standard in the sense that advertisement, one of the ethical violations. So I cannot tell my firm name. I'm sure you can search the institute record and find out. If I announce my firm name, it will amount to advertisement. I cannot do that. If cost auditor finds fraud in financial statements, he will communicate to statutory auditor or report to CG. This is something that you will have to wait a little bit, Abdul. With a little bit of patience, we will be doing cost audit at the end of this session. At that time, I will definitely tell you about duties of a cost auditor. But one thing, cost auditor has nothing to do with statutory auditor. We don't talk to each other also. If at all we coincide, we are in the same. It has happened sometimes when I visit the factory, find the cost auditor is also there. Then in the guest house, we will meet. Hi, how are you? How are you? Talk to each other. Maybe have dinner together in the same dining hall, and that's it. Other than that, he and I have nothing to do with each other. He can report to CG, RN, we will see that. But not to me. I have nothing to do with him. But if at all there is any reporting in the cost audit about it, I will have to take cognizance and accordingly build it into my auditing. Why will we forward the file to the board of directors of the company itself? The fraud is done by the company itself. Not necessarily. If it is done by, see, this is definitely a catch. I'm surprised that nobody asked this up to now. See, they are saying where the fraud is up to 1 crore, you go to the central government. Less than 1 crore, you go to the audit committee. This means that there is a lot of issue here. As you rightly point out, if it is committed by the officer, they are the officers. So if I go to them, what respect I'll have? It is presumed that the audit committee will have some kind of, See, remember, I'm reporting to the audit committee, not to the board. So audit committee is an independent. Independent directors are there. It's presumed that they will have some kind of a conscience and they will be doing something like that. Seriously, I know. But see, I'll tell you how it is. Suppose you report it, your job is over now. Are you able to understand? Tomorrow, if the fraud becomes a public thing, you are safe. That's all. But they will take action, they may not take action. That is not my problem. I have reported it to you. See, if that matter has reached such a stage, believe me, the board also will be in deep shit. Because here is an auditor going to report fraud. Okay. So, and again, they have to take this into account in the report. Board's report, they have to mention it. So, if they are also party to it, they'll be worried about it. Right. So, I think there is a lot of element of control is built into it. If management has given written representation about something while doing audit, can auditor relay? See, if it is something that the auditor cannot verify on his own and where there is no way, then you can. But even then, reliance on management report will not absolve you of your duty of verification. So you can't simply say give everything. Sometimes you can. Depends. See, for example, 1 or 2 issues where policy level issues, you can say this is what we normally do. Something like that. You can't say stock valuation, you get a management report. Stock verification, you get a management report. You can. To an extent, you can. That you can get a management report saying, we are normally verifying stock on a regular basis and that where discrepancies are noticed, it is being adjusted. You can say. But that doesn't absolve you of taking stock at the end of the year. You should also take stock. Randomly, you should take high value stock and you should satisfy yourself that stock records are correctly maintained. Without doing that, you cannot simply short circuit it and take a management representation. This is my view. See, Mr. Muhammad Aslam, your comment itself is very, very bad. Don't put it here. If you have revised all, it is not my problem at all. Don't mention it. See, any proof of your work should be shown finally in the result of the exam. So don't keep giving these comments are what is making me worried about you, Muhammad Aslam. Are you an overconfident gentleman? Are you a person who keeps on saying, I have done everything, I have done everything, I have done everything? Such people only are finding it very difficult to clear the exam. Keep quiet. Study. Show your entire greatness in the exam. Here, don't waste our time. by telling I have written everything, I have revised all, I have written next, like that and all. Don't give comments. I've been telling this to you from day one. I'm telling don't put such comments, don't put such comments. And you're still putting it. Don't put it. In a good faith, I'm telling. Since you are a good student, I'm telling don't put such comments. I'm not really interested in whether you have revised or not. Because there are other students here. Okay, so let them, nobody is putting other than you. Use this query pad only for asking questions. In your case, if you want to share some unnecessary information, share it. But please do not put revised all and all. Okay. Chalo, government audit. See, that's what. You don't tell me when to move, when to start, who, what. Because there are other students here. You are not my only student. I'm not conducting private coaching for you. Okay. Why will we forward the file to the board? Okay. Chalo. Got it? So don't tell me what to do, when to do, how to do. You don't dictate me what to do. Okay. Not only now, right from 1992, no student has told me what to do in the class. I know what I'm doing. If you don't like it, that's different. But if you follow the way I am teaching, you will definitely clear. See, recently in the exam clearing, I'm getting so many messages from students. Sir, I followed only your lectures. I'm clearing. Why? Because they believed me. You believe me and you attend. Simply don't tell me what to do, when to go. I have a time management. I know when to complete the topic. I'll do that. Okay. Because questions are coming, I have to answer, I have to give. Now, so coming to the point, government companies. Now that we'll come to the audit of government companies. See, government companies are not that all the other rules and regulations, auditing standards, blah, blah, will apply to government company also. Except that where a government company audit is done, in addition to that, C&AG also will give directions. Because who is appointing you for a government company? The Controller and Auditor General. Right? So he is appointing you under 139(5) or 139(7). So the Controller and Auditor General, in the case of a government company or any other company owned or controlled directly or indirectly by the central government or by any state government or governments, or partly by the central government and partly by one or more state governments, the CAG shall appoint the auditor. And so this list of companies which are appointed by the government, CAG is there. Government company are owned or directly controlled or owned by central government or state government, partly by CG or partly by one or more state governments. The CAG shall appoint. We already saw this. And direct such auditor, the manner in which the accounts of the company are required to be audited, and thereupon the auditor so appointed shall submit a copy of the audit report to the CAG. Right? A copy of the audit report is filed with the CAG. And the audit report, of course, the audit report is given to the members. But the copy of the audit report should be filed to the CAG. The audit report, among other things, include the directions, if any, issued by the CAG. Usually, CAG will give directions. Earlier, under 619(3), they have given an elaborate set of directions, which you have to comply with. If you're auditing the government company, in addition to your normal audit report, you should also fill up the proprietary audit report. Only for government companies. There will be a separate set of questions that government wants you to answer, CAG wants you to answer. And if any issues are there, whether what is the action taken thereon, its impact on the accounts and financial statement, etc. Then, from 60 days from the date of the report, the CAG has the right, please note, the CAG has the right to conduct a supplementary audit of the company by the persons or persons. Usually, the CAG has auditors, government auditors. So they will be there. They will do a supplementary audit. In fact, in many large companies, the CAG will have their own wing. Continuously, they will audit, like SAIL, Indian Oil and all. They will continuously audit. There will be a continuous audit by CAG. Okay, and reporting to the government. Continuous. Like internal audit, CAG will conduct. In addition to that, they will conduct supplementary. Usually, if the audit has been conducted correctly, accounting standards have been correctly complied with Ind AS and all, generally you will find the supplementary audit does not result in any comment. Otherwise, there may be a comment on that supplement. In fact, whenever we audit a government company, at the end of the audit, we are waiting, the auditor will be waiting, because whether supplementary audit, there is any comment. Ideally, there will be no comment. But invariably, I found whenever there is a comment also, the audit comment will be only in connection with Ind AS or accounting standard. Okay. Only those comments will come. Rarely I have found any transactional issue coming up in supplementary audit comment. Okay. They will say that Ind AS is not complied, auditor should have seen that. Then the auditor will have to give his opinion like that. In fact, one government company, the auditor had done the audit, then AS 22, he had done it, then the supplementary audit, they said you should have done it like this. Then the CAG the company came to me and said CAG is wanting an opinion on this from a third party auditor other than the company's auditor. So I gave an opinion based on this things, and I gave an opinion on AS 22, and that was a different story. What I'm trying to say is that was not given to CAG, that was given to the company. Company then gave it to CAG. So this is what is the opinion given by another independent chartered accountant. We generally see, because in southern region I have conducted some workshops on accounting standards for the CAG auditors. I have conducted. That was a different experience about 20 years ago. Accounting standards, not Ind AS, old accounting standards. Any comments given by the CAG upon or supplement to the audit report shall be sent by the company to every person entitled to the copies of audited financial statements, and also be placed before the AGM of the company. Along with the annual report, they will also publish the supplementary comments. Usually nil comment, nil. There will be one on the CAG's letterhead, no comments, nil comments. That is the ideal. If any comments are there, that's dangerous. Also, government company or company controlled by state government or central government, CAG may, if he considers necessary, test audit may be conducted on the accounts without prejudice to the provisions of audit. In addition to the statutory audit, the central government, the CAG may also do a test audit. That's the point. Whenever there is a branch office, where a company has a branch office, the accounts of that audit, if it is in India, shall be audited by the company's auditor under section 139. So the company's auditor can himself audit branch. But if it is too much of a bother and too many branches are there, then for the branch audit, you can appoint a person who is qualified for appointment as an auditor of the company under section 139. So the same qualification, member of the Institute of Chartered Accountants India, firm, majority, no disqualification, everything applies to branch auditor also. If the branch is situated outside India, then that audit can also be done by the company's auditor or by an accountant or by any other person duly qualified to act as an auditor of the accounts of the branch of it in that country. So if you're having a branch in Singapore, you can appoint a person who is qualified to act as an auditor in Singapore. So that is how we normally do. In addition to that, the company's auditor can also visit in case he feels. But normally, no. If we receive all the information, we will not. The duties and powers of the company's auditor with reference to the audit of the branch and the branch auditor, if any, shall be as contained in 1 to 4 of section 143. Same duties and powers with respect to the audit of the branch. So the same duties of the company's auditor will apply to the branch auditor with respect to the branch audit. The branch auditor shall prepare a report on the accounts of the branch examined by him and submit it to the auditor of the company. He will not send it to the he is not reporting to the members. There is no privity between the branch auditor and the members. The branch auditor is appointed by the board in consultation with the statutory auditor. And the report of the branch auditor is given to the statutory auditor, who shall deal with it in his report in such manner as he considers necessary. This is what you are reporting in your audit report also. Where there are branches and you have received branch audit report, how have you dealt with it in your report? Is what you are answering there. The provisions regarding reporting of fraud by the auditor shall also extend to the branch auditor. See, in the case of the bank I was mentioning, the central statutory auditors were all debarred, but the branch auditors were all reappointed. In fact, they were given better and bigger branches. Those who are reported negatively, those like me who qualified, we got recognized. There was a reason was that the regime had changed. So the new regime wanted to blame the old regime. So those who had given audit, they were seen as good people. Come, you be the auditors for us. You are the guys who refuse to bow to the pressure. So that is all. The provisions of this section shall mutandis apply to a cost auditor and a secretarial auditor. Provisions of this section 143, that is powers and duties of auditor, reporting duties, will apply mutatis mutandis, which you know what it is. Mutatis mutandis, mutatis mutandir, all are one and the same bus. If you think it's mutatis mutandir, please go use mutatis mutandir also. It's just the Latin. If you want to use ir also, it's okay. It will apply to a cost auditor under secretarial auditor during the performance of his duties under section 148 and section 204. Secretarial audit under 204 and secretarial audit you will see later in your final syllabus. Cost audit here. You will be seeing it in 148 very shortly. If any auditor, cost accountant or company secretary in practice does not comply with the provisions of subsection 12, he shall, in case of a listed company, be liable to a penalty of 5 lakhs and any other company, unlisted company, other than listed company, 1 lakh. Okay. So the penalty has changed. This is the new penalty which is. Auditor has to sign the audit report. The person appointed as an auditor should sign the audit report or sign or certify. And in the case of, in accordance with the provisions of subsection 2 and LLP, only chartered accountants are authorized to act as statutory auditors and sign. The qualifications, observations, comments, financial transactions, etc., which have adverse effect, shall be read before the company in general meeting and shall be open to inspection by any member. The auditor shall be entitled to receive all, 146 is very interesting. Auditor shall be entitled to receive all notice and other communications relating to any general meeting. The auditor shall, unless otherwise exempted by the company, attend. Auditor shall attend, either by himself or through his authorized representative, who shall also be a qualified an auditor, any general meeting. So, wherever statutory audit is there, unless exempted by the company, the auditor shall. Invariably, whenever I sign, I will also send a letter saying, invariably, I'll be out of station on that day. So, my people will send a letter signed by me, kindly exempt me, and we will obtain a mail saying, sir, don't bother, sir, we'll take care. But in some cases, if the company says, no, you have to come, I have to go. In case there is no other go, then I should send a qualified assistant, who is also an auditor, to attend. Okay? Or my own partner to attend. The auditor shall have the right to be heard at such meeting on any part of the business which concerns him as the auditor. Okay? The right to be heard. Okay. In case there is any contravention of 147, there is any of 139 to 146. 139 to 146, if you contravene, then the company is liable to have. So in case it is not mentioned there also, here it is there. So company, this is not for auditor. For auditor, it's here. 143, 14. It's here. Okay. For company, not filing return, not filing form, fine 25,000 to 5 lakh. Officers, 10,000 to 1 lakh. No imprisonment. For auditor, 147 2. Where auditor contravenes 139, 144, 145. Please note, 145 comes here. If you are rendering any, shall we say, prohibited services, it's a violation. 139, of course, and 145. Okay. Unknowingly, if you do it, then fine rupees 25,000 to 5 lakh or 4 times the remuneration. Unknowingly, knowingly or willfully, if you do it. See, including 145 bars, signing of audit reports, okay, everything. If the auditor does it, luckily for us, 146 is not a violation. For us, only 139, 144, 145. If you are knowingly or unknowingly or willfully, then imprisonment up to 1 year and fine 50,000 to rupees 25 lakhs or 8 times the remuneration. If convicted for any offence involving under this, then he has to refund the remuneration received and pay for damages. All this is stringently provided now. Earlier we had no such penalties. So we had a jolly time. Thanks to one greedy auditor of Satyam, everybody is now caught by this. And we are all suffering from this one greediness. Now we go on to the great cost audit, okay, which is to be conducted only by cost auditor. Auditor proxy cannot attend. No proxy. You can send somebody, but that person, that so-called proxy, if you want to use the word proxy, that proxy should also be a qualified person. Okay? The proxy should also be the authorized representative. You can't call him proxy. He's not a proxy. He can be a qualified person. Okay? Supplementary audit. Supplementary means in addition to. Quickly let us take. What is the qualification of C&AG? President of India only should tell. C&AG is a government official. He has written an exam called IA and AS. When you write your UPSC, Union Public Service Commission, there are IAS officers, IPS, like that, IA and AS. Indian Accounting and Auditing Services. They will be members of the IA and AS. So if you want to know qualification, you would have come as a basic IA and AS, promoted. Finally, everything is in right place. Mercury is in right place. Guru is in right place. Sun is in right place. Then he will become C&AG. And basic qualification, maybe he's a chartered accountant, M.Com, B.Com. Nobody knows. But he'll be IA and AS. Okay. C&AG, that's what in my view. But he'll be an IA and AS. What is the meaning of supplementary? Supplement means in addition to. So auditor is already conducting an audit. Now, after the audit is completed, the C&AG will conduct an additional audit, addition to, just to be sure that the auditor has done correctly, especially with respect to Ind AS, compliance with accounting standard, auditing standard, they will do it. Okay, that is called supplementary audit. At the end of the supplementary audit, they may give some comments for which the company has to give suitable reply. But normally, they will not give any comment. It is, you see, they will just come and they will go through the auditing. They will go through the financial statement, notes on accounts, and then based on that, they may ask for some information. And then they will see whether correctly the notes have been given, whether it's all correctly represented, and they will. That's how the supplementary audit will be done. And they may do some transactional audit, but not much, just to be sure. Okay. Is there any difference? In addition to supplementary audit and without prejudice to the statutory audit, C&AG can also do test audit of transactions. Normally, they won't touch transactions, but if they want, they can do test audit of transactions also. Usually, it is done after supplementary audit because supplementary audit has to be done fast. Once the statutory audit is over, supplementary will be done, clean report will be given, then automatically annual report will be preferred, AGM will be conducted. So test audit will be in fact, test audit can be continuous also in addition to supplemental audit. Can CA do cost audit? We will see. Central government may prescribe maintenance of particulars relating to utilization of material. This shall also include in the books of account kept under section 128 by the class of companies. So you will notice that under 128, we have also seen books of account, cost records also should be maintained. So only those companies which are required to maintain, where the central government has prescribed maintenance, only those companies have to maintain particulars relating to utilization of material, labor, etc., or items of cost. Only those companies. Okay. Other companies need not maintain cost records. Okay. Now, the central government shall, before issuing the order, consult the regulatory body, if any, for example, the sugar board or somebody, before they give this. The classes of companies for which maintenance of cost record is prescribed is contained in Rule 3. Out of those, we'll see that. I'm going to show the chart. Out of those companies, only such companies covered by Rule 4 shall have mandatory cost audit. So this is the summary of Rule 4 and Rule 3. Okay. Cost records to be maintained by companies where the turnover is not less than rupees 35 crores. Please understand, if your turnover is not less than 35 crores and cost record has been prescribed for you, then you have to maintain cost records. So, first of all, government should prescribe, then your turnover should be not less than 35 crores, then you have to maintain cost records. Out of those companies which are required to maintain cost records, out of those, listen to me now, you want to ask the question. Out of the companies which are required to maintain cost records, the following companies shall have mandatory cost audit. Which are they? If they are in the regulated sector, meaning, for example, price regulation is there or quantity regulation is there, then that is called regulated sector. Today, post-liberalization, the regulated sector has shrunk. Very few companies are in regulated sector. Okay. If it is in, for example, cement was in regulated sector, now it is not regulated. Sugar is still in regulated sector. Sugar is the only thing I remember which is in regulated sector. And alcohol maybe is in regulated. Otherwise, I don't see. There is no control on production and there is no control on price. Earlier, under the stupid socialistic regime, they used to decide how much units to produce and give license, idiots. And they used to decide at what price you should sell. then where is the entrepreneurial here? You decide what to produce, you decide what to sell, you run it. Why entrepreneur should even bother to run? At that time, when the set of crony capitalists ran, who got the license, Raj. They took licenses from the government and ran. And they made huge profit because nobody else could make. And they got the licenses by paying something and they got it. They did. That was a different type of crony capitalism in socialistic era. Now in capitalistic era, another type of crony capitalism. Okay. Whatever it is, if it is a regulated sector, then the overall turnover, please concentrate, you will not ask any question. If you concentrate now, you will not ask any question. Overall annual turnover from all products and services during immediately preceding financial year, overall turnover from all products is 50 crores. Okay, 50 crores. All products. And aggregate turnover is 25 crores. That is from this product. Overall annual turnover from all products is 50, and from this product which you are maintaining cost record is 25 crores. Overall, in the case of non-regulated, overall turnover from all products and services during immediately preceding financial year is 100 crores. And from this product only, the one that you are maintaining is 35 crores. To help you to understand, a company may be manufacturing many items. It may be in many activities. So the overall turnover will be there. Out of that, it may be manufacturing one item for which cost records have been prescribed, for which it is more. Then that item, if the turnover of the company is more than 35 crore, they have to get it. The cost records have to be maintained for that product. And for that category where it's regulated, if the overall turnover is more than 50 crore and aggregate turnover is greater than or equal to 25 crore, then means this turnover, the turnover of this product is 25 crore, then you have to get cost audit done. For unregulated sector, it's 100 crores and 35 crores, right? So, in fact, this is the only main provision that you have to see. In this entire topic, this is the only provision. Cost audit shall be conducted by a cost accountant, never by earlier it used to be done by a chartered accountant who possesses the necessary qualification. Now, only cost accountant. You should be a member of the Institute of Cost and Works, Cost Accountant of India, ICAI, not our ICAI, their ICAI, who shall be appointed by the board not by the members, on such remuneration as may be determined. No person appointed under 139 as an auditor of the company, that is company auditor, shall be appointed for conducting audit of cost records. Please note this. Statutory auditor cannot be cost auditor. Cost auditor has to comply with cost auditing standards. They have also got some auditing standards which they have to comply with. So, the same as statutory auditor, the board will appoint cost auditor on the recommendation of audit committee where there is an audit committee. In the case where there is no audit committee, the board itself will decide. Okay, the audit committee only will recommend the remuneration, etc. So it is audit committee where there is an audit committee, board where there is no audit committee, they will determine. An audit conductor under section 148 shall be in addition to the audit conductor under 143. Statutory audit cannot include cost audit. Cost audit is separate. Qualifications, disqualifications, rights, duties and obligations applicable to auditors, that is applicable to company auditor, shall so far as may be applicable apply to a cost auditor. It shall be the duty of the company to give all assistance and facilities to the cost auditor appointed under this section for auditing the cost records. This is all standard. Cost auditor will submit his report to the board. Then the company will furnish the cost audit report to central government within 30 days. And full information or explanation on every reservation or qualification. See, unlike the statutory audit report, the cost audit report is very complex. You'll have to take the elements of cost, see what is the control, see how they have arrived at it, then the final cost sheet. And then not only should you give a report on the cost auditing records, you should also give suggestions for improvement. That is why you will find most cost auditors are also consultants. So it is not enough if they say everything is correct. See, statutory auditors simply true and fair view and then run away. They can't do that. They have to give suggestions, changing, which is better, whether it is good. They are supposed to add value. So all that, whatever they are giving, changes for improvement, reservation, etc., that has to be explained by the board. Then the company will furnish the cost audit report to central government along with information and explanation on every reservation or qualification. Then the central government will go through it and if found necessary, call for further information. If necessary, the company should furnish that also. Finally, the central government is satisfied that the cost audit report is okay. They will close the report and give a final order saying report closed. Thereafter, the cost auditor can be happy and go home merrily, be appointed for the next year and come again. Of course, 5 years, all that applies to him also. Everything we saw about cooling period applies to him also. If any default is made in appointing cost auditor, maintaining cost records and all, company and every officer, same as 147. Just refer to 147. The cost auditor, as per 2 and 4 of section 147. We already saw that. So, of being heard. Yeah. Once we are sending somebody who is, that is why we are sending an auditor. He also has the right. Okay, my firm name is SNB Associates. Thank you. Thank you for giving my firm name. No, it's not my firm name. SNB Associates is not my firm name. Without prejudice and supplementary and in addition. Without prejudice, yeah, sort of. Yeah, but you cannot use them interchangeably, sir. They are used in different contexts. So, sorry, I cannot, unless you are familiar with the way English is spoken, no, you will understand that merely because words are synonymous, you cannot interchange them. So, without prejudice is used in one context. When you are telling something, you are saying, hey, whatever we have told there is there. In addition to that, this is there. In that meaning only you say without prejudice. Okay. Supplementary is something is already done. Over and above that it is done. That is called supplementary. In addition to, but over and above that is the correct meaning of supplementary. It is in addition to, but over and above. Already something is done. Over and above that you are doing. That is called supplementary. Okay. Yeah. Almost. See, that's what I'm saying. English is a treacherous and dangerous language. I don't want to make rules like that. I know when to use which. That's all I can say. I can't define it, but I know when to use. When I'm speaking English, I know when to use without prejudice. I know when to use in addition to, and I know when to use supplementary. I know how to do it. By sheer practice only, it will come. If you don't want to remember, don't remember. But I suggest that you remember. Yeah, Abhishek, yeah. No, now it's not ICMA. I think it's ICAI. They are calling themselves Institute of Cost Auditors of India. Confusing with us. Thank you, Mr. Aslam. It's not enough if you obey. I want to see you obeying. The obedience should not only be told, it should be seen. You should not do what I'm telling you not to do. Okay, sir. Thank you for your wonderful support and participation in the class, making it very interesting for me. Let us hope, inshallah, we will meet again in negotiable instruments and we'll talk more about it. Thank you very much. Have a great evening. Bye.